Scott, good to see how you're doing, brother. You're the first one in. How you doing? How you doing today? What's up with the XRP case? There was something going around regarding the matter of they should, come to some sort of a conclusion. Evening, Miles of CMF. Good to see you, Joe. How you doing? Good evening, Miles of CMF Talk. Good to see you. How you doing? Scott, let's go. Pablo, good to see you. How you doing? How you been? What's up, brother Miles? And how you doing, family? I'm doing great, below. Good to see you. How you doing? How's football going, below? Mike, good to see you as well. How you doing? Good day. All right, brother Camel, good to see you as well. How you doing? George, good to see you as well. How you doing? How's Coinbase going? Good. Coinbase going very good. Thank you, guys. Any XRP news towards the end of the live, yeah. Towards the end of the live, we definitely got some Ripple news to go through. Dennis, good to see you as well. How you doing? Hi, Miles of CMF. How you been, Dennis? How's things? Yes, I'm first tonight. Let's go, Scott. What's up, Miles? What's up, CMF? Carrie, good to see you as well. How you doing? Hello, Miles and family. Good to see you as well. How you doing, team? SEC Ripple case settlement? No, not yet. Evening, Miles and CMF. Jason, good to see you as well. How you doing? Good evening, Miles. And how are you today? Emmanuel, I'm doing great. How you doing? How you been? Share the live. Let's go, Scott. So, on tonight's episode of the CMF Live. Hello, Miles and family. Comatose, good to see you as well. How you doing? How you been? On tonight's episode of the CMF Live, episode 192, which is amazing, actually, to be fairly honest. So, these are the news topics we're going to be going through on tonight's episode of the CMF Live. The first news we're going to be going through on tonight's live is regarding essentially investment officer. An investment officer of a giant company regarding Bitcoin and US elections is what we're going to be going through. It's basically Bitwise's CEO's perspective on the market movements. Then we're going to be going through the news topic on MicroStrategy on tonight's live as well. MicroStrategy is going to be raising quite a lot of money to go back inside the Bitcoin BTF, essentially Bitcoin market space. Then we're going to be talking about the US Treasury. The US Treasury has released a new report, which we're going to go through the bullet points on tonight's live as well. They also talked about the CBDC and Tether as well. We're also going to be talking about on tonight's live regarding the Florida CFO, talking about how Bitcoin ETFs or ETFs in general can be used for pensions. Then we're going to be talking about tonight's live regarding Microsoft. As I revealed a few nights ago, Microsoft is going to be doing a vote on if their company assets should go towards Bitcoin ETFs or any sort of ETFs in that matter. Apparently, they've reached their pre-voting stages, so we're going to talk about that on tonight's live. We're also going to be talking about on tonight's live regarding Coinbase. Coinbase's reports have came out on if they were good or bad in terms of inflows coming in. Then we're going to be talking about UBS Bank, essentially on tonight's live as well. UBS thinks that US elections will affect global markets no matter who wins the elections. We're going to be talking about their perspective on this matter. And then we're going to be talking about tonight's live regarding Bitcoin, Bitcoin's volatility essentially in Japan, essentially in the Japanese market space. And then we're going to be talking about tonight's live regarding a financial, essentially, a company based on Wall Street, essentially entering the crypto space, and they've chosen one particular crypto project to sign up with. Then we're going to be talking about JP Morgan on tonight's live. JP Morgan's CEO, Jamie Dimon, has given his perspectives on how things are unfair for the banking sector. Also relatable to crypto assets. And then we're going to be talking about tonight's live regarding will banks or sort of institutions, what's the benefit of banks or institutions choosing public blockchains over private chains? And then we're also going to be talking about tonight's live regarding the Hong Kong Stock Exchange. The Hong Kong Stock Exchange has just done something that's never been done before. Once we get to the news, I'll reveal what it is. And then we're going to be talking about tonight's live regarding Ripple towards the end of the live, which is Ripple's new offering that they've essentially mentioned on their own website. So those are the news topics we're going to be talking about tonight's live regarding Hong Kong Stock Exchange, the EU market space, just like usual, the Japanese market space, for example, but the US Treasury report, most importantly. But before we go through any of those news topics, I just want to say welcome to the CMF Live. If you're watching this for the first time ever, this is episode 192 of the CMF Live, which is absolutely amazing. So on this live, I talk about the most recent things that's happening around the world in terms of cryptocurrency, CBDCs, politics, AI, regulations, vital information for you to know about regarding the world completely transforming into a digital space. Also, the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we do Q&As on this live as well, which means if you have any questions, do not be shy. Even if you are new inside the crypto space, put your comments down inside the comment section. I'll be more than happy to answer your questions, whatever questions you may have. Now, the live show has officially started. I just want to say one thing as well. Thank you so much to everybody who's right now, because I'm getting essentially notifications. Thank you so much to everybody right now who's retweeted this live. If you're watching us on X, thank you so much to everyone that's retweeted this live right at the beginning, who's liked this live and put a comment outside the video on the essentially X post as well. And thank you so much to everyone on YouTube who's watching us right now, putting a like on the video as well. So, live show has officially started. If you're new, welcome. If you're regular, let's go CMF. Before we go for the first news, let's go to the comment section first, and then we go. From Bitwise is essentially chief officer. Football is going good, just thinking a lot about the future. Let's go, Bill. Good evening, Miles and family. Funky brother, good to see you. How you doing? How you been? Hello, brother Miles. David, good to see you. How you doing? How you been? Morning, Miles and CMF. Shelly, good to see you. How you doing? Morning, how you been? Good Grand Rising CMF. Ray, good to see you. How you doing? Happy Pisces, good to see you. How you doing? How you been? CMFR family, how are you doing today? Share the live. Let's go, Scott. Today's comedy is brought to you by Jamie Dimmons. my man Miles, and let's go. Parker, good to see you. How you doing? Good evening, Miles, and all CMF. JP, good to see you as well, brother. How you doing? How you been? Miles, how high will BTC go before the altcoins will start to pump? Things are a little bit different compared to previous marketplaces. Very, very different compared to previous markets. Because in the past, we never had banks or institutions or ETFs or regulations or election coming up that's going to affect cryptocurrency market space more than ever before. So a lot of things are different this time, or hugely different, to be fairly honest. So how high does it have to go? It's relatable to the market space right now because there's a lot of things happening inside the market space. Toby, good to see you as well. How you doing? So what I would say is after the elections, with some correct policies and regulations in place, altcoins starts essentially doing some movements. Not all types of altcoins, but the majority of altcoins should start seeing some movements if we get the correct regulations and policies coming in. But with the SEC still trying to, shut down crypto operations as much as they can, altcoins aren't going to be able to breathe. For example, we have so many ETFs that have been applied for altcoins, which are not even being looked into. Apparently today also Canary applied for the Solana ETF, which the SEC isn't going to bother looking at. We have an XRP ETF on the line. The SEC isn't bothering to look at that either. We have another XRP ETF. SEC isn't bothering. We have crypto companies lining up to go IPO. The SEC doesn't care. So if we get correct policies and regulations coming in, and then that's when we can see altcoins start to make a move, more ETFs happening, more IPOs happening. So after the election is when we're going to be seeing that move. It's not more relatable to Bitcoin's price point anymore. It's more relatable to regulations and policies, to be fairly honest. Manny, good to see you. How you doing? Evening. Good evening, Miles and CMF. Orvin, good to see you. How you been? So first news topic on tonight's live is regarding Bitwise. Bitwise's chief investment officer, Matt, has commented on the evolving regulatory environments for cryptocurrencies ahead of the upcoming US presidential elections. Now, we've heard a multitude of perspectives on the market space for this election coming up, which is about 5 days, if I'm not mistaken. Speaking to essentially on, so Matt, essentially the chief investment officer of Bitwise, went and did an interview, and this is essentially what he said on the interviews, and this was today. So Matt Hugan noted on his interview that regardless of whether Donald Trump or Kamala Harris wins on November 5th, the post-election environment is a great of an importance for all altcoins. Relatable to your question, essentially, Funky Brother. This is what I'm saying. Essentially, it's not about what price point Bitcoin should reach and then for the altcoins to pump, because that's what essentially had to happen in the past. Bitcoin rises in value, and then people start selling off Bitcoin, feeding into the altcoins. That was the previous method. There's not a single institution that's buying Bitcoin ETFs right now going to be selling off their Bitcoin ETFs to buy into altcoins. So that method is not going to be transferring over anymore. What needs to happen is regulations and policies for altcoins to be able to breathe inside of this market space. So it's also relatable to your question as well, as I answered as well, but here it is. So Matt Hugan also did an interview today. Matt Hugan noted that regardless of whether who wins the elections, the environment is great of importance for altcoins in particular. Matt Hugan noted that Bitcoin is a relatively strong position in terms of their essential regulatory clarity, thanks to this classification as a commodity by the US SEC and Commodities Futures Trading Commission, CFTC. The increasing adoption of spot Bitcoin ETFs is further solidifying his position. Bitcoin doesn't need Washington to succeed, Martigan said. However, also institutions are getting into the space, adoption is increasing, ETFs are flowing, and things are happening for Bitcoin ETF space. And I think we're going to see higher numbers anyways. However, he noted that altcoins, on the other hand, are facing a more uncertain regulatory environment, which could be significantly shaped by the election outcomes. Polymarkets, essentially Ethereum-based forecast odds, are heavily tailored towards favor of Donald Trump's victory for the former president of the United States, approaching 70%, marking the highest levels ever for the vice president of Harris to be completely losing in the polymarket space. Odds have fallen to the lowest level since she took the ticket in August. The market, which has a cultivable essentially estimate for the outcome exceeding $2.6 billion in points, to growing investor interest in elections' impact on crypto space. Matt Huggins said that if Trump wins and Republicans take control of Congress, it could pave the way for several crypto-friendly bills to be passed, which is very, very likely. Thus, providing clearer rules for digital assets beyond Bitcoin is what we need. I think the regulatory clarity that you're talking about is actually more important for altcoins, namely essentially Ethereum, XRP, Solana, AVAX, and so on. He said they are more exposed to regulatory risk. So I would expect an altcoin rally even more than a Bitcoin rally if Trump wins. But regardless, I think both will go up. In his analysis, Matt Huggins said that the new SEC under Trump administration could create a favorable environment for institutional adoption of altcoins, which could lead to a broader market rally. He believes that the coming year would be even more promising for digital assets. And earlier this month, Bitwise cited a strong momentum predicting that Bitcoin could rise to $80,000 by the end of 2024 in a note to their high-profile clients that were sent over. But yeah, honestly, for an alt type of season to happen, we need regulations. Without regulations and policies, altcoins aren't going to be able to move too much. They will move, to the upside following Bitcoin, but they'll tiptoe behind Bitcoin. If we want altcoins to essentially do some sort of extreme movements, regulations and policies need to be there. And the SEC is the one right now stifling that moment. So, president is chosen, regulations and policies are passed, altcoins start to move. Because right now, altcoins can't move. They're stifled. Because there are altcoin ETFs essentially being applied. There's an XRP ETF. There's two XRP ETFs that the SEC is not even bothering looking at. There's a Solana ETF apparently filed in today by Canary as well. SEC couldn't care less. There's a multitude of essentially blockchain companies willing to go IPO. The SEC doesn't care. So regulations and policies need to pass. So for an altcoin season to be happening, regulations. But the only thing before regulations, we need the president in control of the United States, and we need a new chairman of the SEC for altcoins to be able to move. So it's not like the past when everything feeds into Bitcoin and then people sell off Bitcoin and feed into altcoins. It's no longer like that anymore, because all these institutions buying into Bitcoin ETFs and reaching high numbers of inflows, none of these essential institutions are going to be selling off their Bitcoin ETFs to feed into altcoins. It's just never going to be possible. So regulations and policies. Hi, is this live? Yes, it is, David. This is live. How you doing? Good to see you. So same thing I said, repeated by Matt Huggins. Now, moving off essentially Matt Huggins' perspective on the market space, which is very, very correct because things are very, very different, to MicroStrategy. MicroStrategy is about to be doing something impressive, you could even say. They're going to be raising $42 billion, and that $42 billion is going to be feeding into essentially Bitcoin, which is crazy. But they're going to be doing it in over a span of 3 years. David says, I want to hear him saying it's live. David, I'm reading your comment. This is live. How you doing, David? But before we go for the MicroStrategy news, let's go inside the comment section first. But MicroStrategy is about to be raising $42 billion. I'm going to tell you how they're going to be raising that money and how it's going to be allocated towards Bitcoin, which is impressive. $42 billion going towards Bitcoin from MicroStrategy themselves. But let's go through the comment section first before we answer that question. By the way, this is live. If you're watching this for the first time ever, this is live. And if you do have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. Now, let's see where we were inside the comment section before we continue forward. Good evening, Miles of CMF. Orphan, good to see you. How you doing? Good evening, Miles of CMF. Bullock Soppy, good to see you. How you doing? Evening, Miles of CMF. Peeps, Semper, good to see you. How you doing? Hit the like. Let's go, Messi. Is he live? Yes, I am. I want to hear it. Did you see the post from Will Fudd ABC mistakenly airs election results for Pennsylvania? I didn't see the election results mistakenly aired from essentially Will Fudd ABC News. No, I haven't seen them. Why? What was the FUD and what was the results released? I just getting FUD at the same time doesn't have something to do with the crypto stuff. Maybe. But do you know what's going to be happening? This. Now, MicroStrategy. MicroStrategy unveils ambitious $42 billion Bitcoin acquisition strategy. In a bold move reinforcing MicroStrategy's unwavering essentially commitment to cryptocurrencies, MicroStrategy has announced a groundbreaking capital essentially initiative aimed at acquiring more Bitcoins. The software technology firm disclosed today that its third quarter earnings on Thursday that was revealed, revealing plans to bolster its essentially already substantial Bitcoin holdings, which is currently standing at 252,220 Bitcoins. In a press release today that came out, MicroStrategy outlined its strategic objective to raise $42 billion over the next 3 years, split evenly between $21 billion in equity and $21 billion in fixed income securities. This initiative, dubbed the 21-21 Plan, aims to enhance shareholder value by leveraging essentially the ongoing digital transformation of capital. Fong Ling, the president and CEO of MicroStrategy, emphasized the company's dedication to increasing its Bitcoin reserves as a treasury asset to optimize BTC yields. The year 2024 has been a transformative year for Bitcoin, rebounding significantly from the last year, essentially from Bitcoin's last year downturns. The cryptocurrency made headlines for the first essentially Bitcoin ETFs that launched back in January and surged to an impressive high of $73,000 just 3 months after it. With its recent performance, Bitcoin has seen essentially new records and shows potential for further growth in the coming months, says essentially the CEO of MicroStrategy. MicroStrategy stock MSTR has also mirrored this bullish trend, reaching a new peak as Bitcoin prices soared. On Tuesday, the shares dropped nearly essentially 9%. They jumped in value, hitting $260, a remarkable achievement that reflects a staggering 470% increase throughout 2024, outpacing even Bitcoin's own growth. This positions essentially MicroStrategy as the largest corporate holder of Bitcoin and the world's pioneering Bitcoin treasury company. Andrew Kong, the CFO of MicroStrategy, highlighted the company's success in increasing its Bitcoin holdings by 11% during the last fiscal quarter. He noted that this treasury strategy has elevated their year-to-year essentially date for BTC's yield to an impressive 17.8%, while simultaneously reducing total analyzed interest expenses by $24 million, which is crazy. MicroStrategy has a new plan. They're calling, in the simplest way, MicroStrategy has a new plan. They're calling it 21/21 Plan, which means they're going to be raising $21 billion and then another $21 billion to put into Bitcoin. They're officially going to become the only company you could say that's holding a substantial, crazy amount of Bitcoin. MicroStrategy really wants to compete with BlackRock on a whole nother level. Now, and what's the crazy part about this is MicroStrategy's stock, MSTR, has risen more in value than Bitcoin itself. But the only reason MicroStrategy's stock, MSTR, has risen in value in the first place is because of Bitcoin. Now, moving off essentially MicroStrategy's new plan called 21/21 to raise $21 billion, another $21 billion, to the US Treasury is what we're going to be talking about next. The US Treasury Advisory Panel has essentially said that tokenization could be big, but may need essentially a central control. So the US Treasury has came out with a new report today. And on that new report, they've been discussing matters of tokenization, CBDCs, and a little bit towards the end regarding Tether. But that wasn't on the report. It was more like off the report. But before we go through that, let's go inside the comment section. First, as I said, this is a live, which means if you do have any questions, put it down inside the comment section. So before we go through the next news, let's go inside the comment section first. Let's see what's going on there. And is Sui in your top 10? Wait, okay, let's just, because I missed a few questions. Let's see where we were. Okay, kick out. Yeah, he's already out. Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been, Lena? Hi, Miles. Lotus, good to see you. How you doing? How you been? You think that Sui is better to hold in turn? Is Sui better to hold? Sui is a great project. It's a good project if you want to look into it. Then Quant. You're asking me if Sui is better than Quant. They're both as good as each other. And is Sui in your top 10? No. But it's a good project. It's a good project. There's no doubt about it. I feel something strange is going on. ABC showed Harris winning by 3.2 million compared to 2.9 Trump. Well, here's the thing. I said this a while. I said this a long time. Actually, it was. Sorry about this. It was about 6 months ago on this live that I shared that I think, and I don't want this to happen. Just to point it out, I don't want this to happen. 6 months ago on this live, I said that I think, and it hurts me to say it, that Kamala Harris might win. I said this about 6 months ago. Obviously, I want Trump to win. Everybody wants Trump to win. It's the better, the better candidate by a mile. Trump is the better candidate by a mile. But I said about 6 months ago that I feel like, Kamala might win. The reason why I said 6 months ago Kamala might win, even 6 months ago, I still support, I've always supported, just to put in perspective, I've always supported Trump since the first time he was president until now, just to put that in perspective. But here's the thing. I said that Kamala is pro-CBDC. The Bank of International Settlements is pro-CBDC. The International Monetary Fund, pro-CBDC. The World Economic Forum, pro-CBDC. Every organization with the most powerful people on this planet in it is pro-CBDC. The world wants to go CBDC. Trump against CBDCs. Sorry about this again. Which means Trump is against CBDCs. Which means he's going up against the World Economic Forum, the Bank of International Settlements, the International Monetary Fund, and any other entity that's out there that's pro-CBDC. And these are very wealthy individuals in these groups. And I said because of that reason, Kamala might win because she's pro-CBDC, and they won't let Trump make it. But I hope that doesn't happen. Either way, CBDCs will happen. Trump might try to stifle it for a little bit before it happens. It's going to happen either way, but Kamala will be pro-CBDC instantly. So even if Trump is chosen, which is the better option, at least the economy is fixed and we're, CBDC world, not just Kamala. Kamala is going to be just pro-CBDC and the economy is going to be ruined. Thanks again for the advice from my friend this evening. No problem, anytime. The closing day, they are closing down the Enbridge project. Is it good or bad for XRP? Enbridge was on essentially ETH, if I'm not mistaken. Enbridge was on ETH. Good, I'll be honest. Very, very good. Brother, I have MAGA hat. How about a MAGA hat? I don't have a MAGA hat, I'll be honest with you, but I've always supported Trump. Always. From his first time he was president until now. SEC will come after America because Trump's not a politician, and that's why I like him. Trump is not a politician, he's a businessman, which a businessman should technically run a country. A businessman or a businesswoman, either, essentially party. A business person, in other words, should run a country, not a politician. Politicians are greedy, scum, they'll sell their soul for a quick buck. Businessmen know how to run a company, which means they can run a country, depending on how big their company was. SEC will come after MicroStrategy. I don't believe they will. The SEC hasn't came after because only MicroStrategy is only involved with Bitcoin, which is, very low chance essentially they're going to be coming after them, unless MicroStrategy decides to expand into other altcoins. Then they can be hit by some sort of securities lawsuit or Wells notice. But for the time being, because they're in Bitcoin, they won't be hit any sort of lawsuits. Miles, why are people not convinced that XRP is the real deal? So Scott's question, Scott has asked a genuine question. He said, Miles, why are people not convinced that XRP is the real deal? Scott, I'll be very honest with you. Not everybody needs to be convinced that XRP is the real deal. Just to be, because I want to be honest with you, Scott. I want to be honest with everyone. Not everybody needs to be convinced XRP is the real deal. The company's CEO of Ripple, so the CEO of Ripple, the CTO of Ripple, the CLO of Ripple, the co-founders of Ripple, the executive board members of Ripple, they've all stated that XRP is going to be in play. The latest tweet we had was from Monica from Ripple, stating that XRP is going to play a vital role. So here's the thing. On one side of the internet, we have the Ripple company itself stating multitude of times they're going to be using XRP. And we also have, essentially factual evidence on the Bank of International Settlements website regarding a documentation titled Cross-Border Payments, where Ripple's on the list. We also have XRP essentially listed for test trial payments in pretty much every centralized bank you can think of. We also have essentially, essentially the world moving towards CBDCs. The Bank of International Settlements is pushing the world towards CBDCs. And Ripple is the only one that has had an active CBDC platform, won multiple CBDC awards, does multiple essentially speeches at the World Economic Forum, which a lot of people believe anybody can walk in and do a speech at the World Economic Forum. That's not how it works. Because every time Ripple does a speech at the World Economic Forum, people will send out tweets and say, well, anybody can speak at the World Economic Forum. Incorrect. You think they're going to let Shiba Inu do a speech at the World Economic Forum? No. They have to choose you for you to be able to speak at the World Economic Forum. So Ripple essentially from their founders themselves, executive board members and CEOs have stated multiple times that they're going to be using XRP and it's a vital asset. Ripple has a multitude of partnerships, a multitude of licensings, and acquired a lot of businesses. So with all that evidence that's going around, there's going to be people that will still say it's never going to be used. So here's what I would say. Not everybody needs to be convinced. Some people just need to get left behind. Okay, I know you want to save everybody and you want to tell everybody, you need to get on board or you're going to be stuck in a CBDC world, which I always do every single night. But some people still don't listen. And some people just need to learn things the hard way. Unfortunately for them, once they get trapped in CBDCs, it's pretty much game over for them. But some people just need to learn the hard way. You can't convince everybody, even though the evidence is screaming at their face, but you can't convince everybody. And some people need to get left behind. The worst part is, they're going to be stuck on CBDCs and there's no way out for those people. So, Scott, based on your question of Miles, why are people not convinced that XRP is the real deal? Some people, some people just can't be convinced. And some people, in my opinion, sorry to say it, but some people, in my opinion, deserved to get left behind. Genuinely deserve to get left behind. Some people deserve to be on CBDCs. If you're that stupid to not realize that the entire world is shifting towards CBDCs, and there is one platform with an active CBDC that has multiple CBDC awards for their payment system, that is with Bank of International Settlements, with centralized banks, does multiple speeches at the World Economic Forum, then if you're seeing all those things, then some people deserve to be on CBDCs, and some people deserve to get left behind. How well do you feel XLM, XDC, ACH, and HBAR will do? Very well. I vote for Kamala. I don't think she will win. I don't think she will. You never know. Are you smoke? Why do I get the most weirdest people sometimes? Well, there is that much corruption. Nothing would surprise me. I think the same. Do you think the members of the group will have any sort of effect on the elections? Maybe, not that much. Miles, after your prediction about Kamala, I am officially breaking up with you. If you are holding 100 AVAX, enough for futures. If you're holding 100 AVAX, that's a great amount to be holding. Isn't Bank of International Settlements working with Ripple on CBDCs? Why is Project Enbridge on ETH? Project Enbridge is essentially on, it's not technically only on ETH, it's through R3 Corridor as well. But the Bank of International Settlements has 11, just to put perspective. I've said this multiple times as well. The Bank of International Settlements has 11 11 essentially CBDC platforms, 11 CBDC platforms. Enbridge was one of them. It's not the only one, but it's one of them. But Enbridge isn't falling. Based on your original question as well, Enbridge isn't falling. There was a news article that came out today and said Enbridge is falling, Enbridge is going to be stifled, and Enbridge is going to go this and that. It's done by a random journalist with no perspective. But Enbridge isn't falling, but Enbridge is one of the CBDC, essentially, platforms that the Bank of International Settlements has created. There's 11 of them. And it's not only on, essentially, Ethereum, the Enbridge, off-record as well. It's just testings. They've done testings on ETH, they've done testings on off-record. There's multiple testings. Miles, all facts, Miles. I have a feeling Kamala might win / steal the election. CBDCs are inventable, but at least Trump could win us a few more years. Pretty much is what's going to be happening because of the price. Because the price, yeah. Project Enbridge. My hobby is listening, Miles. Make it good. Good. He will come around Trump. He will come around Trump. Trump knows CBDCs are coming down the line. That's true. He's just more focused on the economy, etc., which is also true. With them essentially bringing CBDCs into the mix at the minute. Yeah. Well, here's the thing. Trump can only stifle CBDCs for a small while. He has to implement it at one moment in time. Trump may take crypto tax-free. Might make crypto tax-free. He could possibly make crypto tax-free, but not for long either, because they have to stop taxing crypto. Not saying taxing crypto is what we want. Hell no. Nobody wants to pay their taxes, to be fairly honest. Nobody wants to pay tax in the traditional aspect, never mind the crypto aspect. If anybody can skip tax, they will do it instantly. I would. Everybody would. In the obviously legal manner. Within the law. Skipping taxes is okay. Within the law. Outside the law, hell no. Because that's fines and prison sentencing. But within the law, everybody wants to skip tax. He needs to be educated, is what Shay said. Miles, XLP is a game changer. If it could bring essentially families real wealth and financial security, isn't that the goal? Yes. XLP will, in my opinion, 100% based on the evidence, based on the licensing, based on everything, it will bring life-changing, essentially, financial security to a lot of families. That is the goal. But your original question was, why are people not convinced? Your job is not to be able to convince everybody. If you can convince people to be on the right path, go for it 100%. But if you're talking to the same groups of people you're trying to convince to join the crypto space, to essentially try to convince them that the world is changing around you, banks are closing down, essentially, bank branches are disappearing, cash points are disappearing, nobody essentially can find that many cash points anymore. Places around you, restaurants, bars, gyms, anything you can think of is, essentially bank only, essentially bank cards only, no cash. Everywhere around you is going to be, is already started not accepting cash. And the world is transforming into a CBDC world. And the backbone of the CBDC world is one platform that does it best, and it's Ripple. So if you said all these things to the same groups of people and they still can't get it through their heads with what's happening around them, with the bank branches closing, cash points disappearing, nobody accepts cash anymore wherever you go, then you can't do much more. Some people deserve to be on CBDC. Some people deserve to get left behind. There's no way around it. Some people just deserve to get left behind. The worst part is, once they're on CBDCs, there's no exit. If you're on a CBDC and only CBDCs, there's no exit. Your life is pretty much done. He will come around. Yeah, he will. He needs to be educated. That was funny, Shiba. Hi, Miles. Sorry I'm late on tonight. Hope I've not missed too much, mate. No problem. Good to see how you're doing. We can't talk intelligently to folks. Yeah, you can't, honestly. Some people, it's like talking to a brick wall. If you feel like you're talking to a brick wall, everything you say will just bounce off. So just stop talking to them. Hey, brother. Al Sheikh, how you doing? How you be? Thank you so much for the donation of 100 INR. Thanks so much for the donation, brother. Good to see you as well, brother. Hi, Miles. And that donation is going to go straight into starting up the CMF hedge fund as well. So thanks so much for the donation, brother. Hi, Miles. Just read a news by News BTC that Solana might crash 77% to $40 as whales are moving their assets and some are taking big profits. How true can it be? Zero truth to it. And it's just another journalist writing spewed articles to manipulate the market space. Unfortunately, not everyone can open their eyes to what is really happening in this world. Facts. Absolutely facts, Jason. Miles, you have a new coffee mug? You're the first person that's realized it. Yep. It's the same color, but just different shape. How much XRP to save from CBDCs? Whatever your budget's within. True. I've come to the conclusion that you can't educate idiots. Can't educate idiots. Yeah, but I mean, it's true. If you're holding 100 AVAX, is that a good amount? It's a great amount. It's a great amount. Russia's fine. Russia fines Google. I saw it. So Russia, did you see that? Yes, I did. So Russia is fining essentially Google 20 declins. So apparently, which is the highest number any company has ever been fined in history. So Russia is a Russian court has fined Google for essentially taking out the Kremlin TV channels on YouTube and so on. So Russian TV channels had a lot of Russian channels on YouTube, and YouTube removed all Russian channels, which made the Russian courts sue Google because YouTube Google. The funny part is that Russian courts are suing Google 100,000 Russian rubles pretty much every 24 hours until Google pays the fine. And the fine has reached for Google to pay Russian authorities $20 declin. Now, if you're wondering what the hell is $20 declin, $20 declin is not 20 million, it's not 20 billion, it's not 20 trillion, it's not 20 quadrillion. $20 declin is the number 20 with 32 zeros. 20 plus 32 zeros. It's the highest any company in history has ever been fined. The fine is bigger than the world's GDP. Obviously, Google's never going to pay that. If they did, it's just not even possible. They're going to be in debt for the rest of their lives. Bankruptcy is the only option. Or use Monero. You can use Monero, but here's the thing. Monero isn't going to be widely accepted unless it's on the black market. Okay, one thing you need to know about essentially privacy tokens, which I love, by the way. Privacy tokens are absolutely amazing. And the best way to, do whatever you want in a digital world. But Monero and the other privacy tokens, they're all being delisted from exchanges. Privacy tokens have been delisted from Canadian crypto exchanges this year. They've been delisted from essentially any crypto exchange that's a part of the MiCA regulations in Europe. Privacy tokens in general are going to be delisted worldwide from every exchange, which means privacy tokens are only going to be operating inside the DeFi space, but that's only for a short period of time as well, until the DeFi space gets regulated, where essentially privacy coins can't be used on DeFi spaces as well, which means privacy coins somewhere down the line can only be used on the black market. And that's only if you want to operate in the black market. I'd rather operate in this market rather than the, essentially the background market. But that's the issue of privacy coins. They're being delisted due to regulations and policies because they're difficult to track. Whereas the other crypto projects like Bitcoin, Ethereum, Solana, AVAX, XRP, XLM, XDC, whatever crypto project you can think of that's not a privacy coin, they're easy to track. You can track any crypto asset except privacy coins. They're a little bit difficult to track. They're not impossible to track, but they're difficult to track. But the other crypto assets, they're easy to track. That's why they're being easily listed on those exchanges. And this was also a talking point from a Homeland Security officer. A Homeland Security officer did an interview where he said, if you want to be invisible in this world, the only way to be invisible is cash, which is true. Cash is the only untraceable asset you can pretty much have. Legal tender you can have. Crypto assets, you can do 1,000 transactions wallet to wallet, they'll still be able to track you. It's not difficult. They can still track you. 1,000, you can do 1,000 wallet transfers before you spend your crypto assets. They'll know who you are towards the end. There's multiple ways of finding out who you are. If they couldn't find out who you are through Bitcoin, through Ethereum, through XRP, through Solana, through XDC, through AVAX, through Chainlink, through whatever crypto project, if they couldn't find out who you are when you're doing transactions, they wouldn't let you buy it. They wouldn't regulate it in the first place. So the reason why they let you buy those crypto assets and not the privacy ones is because they can track you on those ones, except the privacy ones. But yeah, but there's an issue of privacies. They've all been delisted, which means that liquidity is going to get very low. Now, somewhere down the line, they're only going to be available in black markets. A lot of people look at the XRP price because there is no movement. They think all the dead project. Yep. One thing you should know about, essentially, is 10 years ago, essentially, roughly 10 years ago, if you look at the top 10 crypto projects from 10 years ago inside the crypto space, you can say, very different to what it is now. But there's still 2 crypto projects standing. 1, Bitcoin. 2, XRP. When XRP and Bitcoin at that moment in time, Ethereum didn't exist. But they're still standing. That should tell you everything you need to know. They don't know that the only one cryptocurrency to have legal clarity that's not a security from the courts, that it's a commodity. Exactly. XRP only can pay its 2035. It has to be over a year. Stop drinking. It has to be over a year. Stop drinking coffee. I'm not drinking coffee. You said I'm drinking coffee. It's water. Look, you can see it's clear, so you should be able to see it. Look, I don't want to spill any. Last time I did this, I spilled on my MacBook. But look, it's water. It's not coffee. I stopped drinking coffee a long time ago. Just water. It's from the fridge. You know, when you put your cup next to the fridge and the water comes out. XRP, as you said, Miles, once the XRP starts pumping, then it's only one way for it. Exactly, when it's finally done. I believe in the project 100%. I've been holding XRP for a few years now, and I will always hold it and borrow against it. Best move ever. Now, US Treasury reports. The US Treasury Advisory Panel says tokenizations could be big. They can be, yes, definitely, without a doubt. And I'll reveal some data points as well from the US Treasury, but may need control. Now, if you remember, a few nights ago, or about a week ago, somebody asked me the question about tokenizations on this live. And I said, the truth about tokenization isn't being told to the retail section. And I said, the other side of tokenization, which nobody talks about inside the crypto space, is tokenization is a great way for the banks and institutions to make more money from the retail section. Because the only part of tokenization that's ever been told inside the crypto space is tokenization is great. Tokenization market space is $16 trillion market space by 2031 and so on, which is all true. And it is all essentially positive. But there's one side of essentially tokenization that isn't being told. Tokenization is just another way to squeeze money out of the retail section for the banks and institutions. You see, when the banks and institutions want to build some sort of a property, for example, let's say a bank or an institution buys land, and essentially the institution, for example, buys this piece of land and they want to build a hotel. They would have to go to the bank to borrow against it and build this hotel. Well, now there's an alternative option. They can essentially buy the land, make it into a tokenization project, and the retail section will fund to build this building. Who essentially is profiting at the end? The retail section, who funded to build this building because they own a tiny part of the building, or the organization that just essentially got a building out of thin air? So there's one side of tokenization that isn't being told. Tokenization is for the banks and institutions to squeeze more money out of the retail section. It's a new avenue stream for these banks and institutions. Now, this is an example of, for example, the Hilton Hotel that's being built in El Salvador. The Hilton Hotel that's going to be built in El Salvador is a tokenization project. Instead of essentially El Salvador funding the project to build the Hilton Hotel next to the airport, they've made it into a tokenization project. Everybody can buy a share, spend $1,000 to $1,600 or above to buy one tiny part of that tokenization project. And what do you get in return for building that massive Hilton Hotel? Sometimes some free drinks at the bar, or maybe a one-night stay. So who's essentially benefiting from tokenization? The person who got an entire Hilton Hotel, or the guy from the retail section that brought a tiny part of that hotel to get some free drinks at the bar once in a while? Or a one-night stay at the hotel. So there's one side of tokenization that's never been told, and it's that part. It's the banks and institutions' new avenue stream to squeeze money out of the retail section. Now, if you want to benefit from tokenization, there is a benefit side on tokenizations. Backbone. If you ever want to essentially benefit like a banker, if you want to act like a banker or an institution, backbone. Never be on the scene. On the scene is buying into the tokenization. Backbone is being the blockchain that's essentially funding the project. So, for example, if the building is going to be built on XRP Ledger, for example, if the building is going to be built on an XRP Ledger, then owning XRP tokens is a better option than going for that tokenization project, because it's going to add indirect value to XRP's token. So keep that in mind. And then if you the banks and institutions were not that excited, they were happy about cross-border payments. Banks and institutions were happy about cross-border payments, cheaper payments, faster settling time, great. But they were over the moon when tokenization started happening, because that's another way for them to squeeze money out of the retail section, because they get to own a building while you own a tiny part of that tokenization part of that building. So don't be fooled. There's always a catch. But that's one side that's never been told. I'm the first person in the entire world to pretty much tell you that side. Not even just inside the crypto space, in the entire world. Just hold XRP gains. Just hide XRP gains with Monero, then trade back to XRP. Is that XRP untraceable? No, not entirely. No. Yo, Miles, Nox, good to see you. How you doing? Got to use non-KYC DEX. You can, yes, but the issue with that is, so crypto Canuck, here's one issue with that. Great token points, very great token points. So, for example, hide your XRP gains with Monero, trade back to XRP afterwards. One issue. And then your other thing, well, I'll answer this one first. So, essentially put your XRP into Monero to hide your transactions and then bring it back to XRP. One issue with that. For example, let's say somewhere down the line, I sell my XRP because I want to hide some transactions and I put it into Monero. Okay, for example, where am I going to be doing that? I can't do it on an exchange because the exchanges don't sell Monero because privacy coins are banned. I could do that inside a DeFi space, but somewhere down the line, the DeFi space is going to be heavily regulated as well. The other issue is my wallet, because of regulations and policies, is also going to be regulated as well, which means any transaction that I do somewhere down the line, because of regulations and policies, because of anti-money laundering laws, they're going to be asking me, why am I essentially transferring my assets to a random DeFi website to make some transfers? Do you see the issue with that? Because of AML laws, and because of strict regulations and policies, I'll give you an example. People in Singapore right now, what's happening in Singapore is going to be happening for the rest of the world, and it already has started. For example, if I want to send essentially through crypto.com, I'll give you one simple example. If I want to send money through crypto.com, for example, or any sort of crypto exchange based in Singapore, I would have to say who essentially I'm sending it to. It's no longer put the person's wallet address. I would have to say who I'm sending it to, how much I'm sending that person in crypto assets, from exchange to an exchange or wallet to wallet. I would have to say who I'm sending it to, how much I'm sending them, why am I sending them cryptocurrencies, and the other person on the other side has to say he's receiving this crypto assets from me, how much he's receiving from me, and so on. That seems very familiar, actually very familiar to a banking system. So the issue with somewhere down the line being able to do that, not possible, virtually not possible. So if I want to do that, essentially take my XRP gains somewhere down the line, put them into essentially Monero on a random DeFi website, because Monero is not accepted on the exchange anymore. They're going to be asking me 21 questions on why am I connecting my wallet to a random DeFi website. In the DeFi essentially space, it's going to be heavily regulated. Heavily regulated. You got to remember one thing: we're not going into a digital world because of, privacy. We're not going into a digital world because they care about our privacy. We're going into a digital world because of control. That's the only reason we're going into a digital world, for more control. Privacy, we don't have privacy now. Never mind in the digital world. So that's another issue with that. And regarding got to use non-KYC DEX, that's another issue as well. How am I going to connect a wallet to a non-KYC? Because they're going to ask me 21 questions. You've got to realize what's happening around you. strict regulations is on the way. We've already had some strict regulations. We have AML protections, which aren't going to be letting us do too much movements inside the crypto space. So it might be your wallet, but the regulations are going to be very strict. And let's not forget, they can freeze your wallet as well, just so that everybody knows. For example, USDT, Tether. Tether can freeze your wallet. To date, Tether has frozen 1,600 wallets. To date, Tether has frozen 1,600 USDT wallets. Some of them with millions of dollars of USDT inside of them. We're going into a digital world for strict regulations, for essentially control, not for privacy. There's no such thing as freedom in a digital world. That's the issue. So abide by the laws is the only option. And sticking your head down with your crypto wallet and spending it. Trying to, go on the sidelines will just end up, your wallet being frozen. No, that's what I'm saying. It's got to be over in a year. You have not been drinking coffee. Oh, yeah. Oh, okay. Yeah, now I get it, JP. Better to own the coin. Yeah, better to own the coin, without a doubt. Yes, I will. U.S. Congress to investigate SEC, apparently. Let's go notifications. They will sell it much more expensive. Yep. People are going to DeFi exchanges, will be approached first. Can't get away from the KYC. Yep, they can't. TradeGore has both no KYC. Well, at one point in time, Gore is going to be IP blacklisted. Good night, Miles of CMF family. Thanks for the info. It was very educational. Thank you, and God bless. William, good night. But we haven't stopped. We've got so much news to go through, William. I hold 100K XRPs. Can I save from CBDC? Yes, you can. Do you think Iran will fire back again? Most likely, yes. Thanks for the reply. No problem, CryptoCam. Anytime. They can freeze Tether addresses, not wallets. They can do both. Now, US Treasury. The US Treasury, so this is why I explained the tokenization, because of this. The US Treasury Advisor Panel did a report. So the US Treasury Department panel of Wall Street advisors see that tokenization of US debt and other essentially assets providing some sort of significant potential advances. The group contended in a new report, while also envisioning an eventual need for the kind of heavy, essentially central-handed that may rankle the crypto sector. So this is essentially a report from the US Treasury on tokenizations, CBDCs, and so on. Cryptocurrencies and the tokenization of US Treasuries were treated with increased seriousness. In the digital assets views it issued by the Treasury's Borrowing Advisory Committee, the group of the private sector financials executives from big named firms such as Citigroup Inc. and Goldman Sachs is assigned with helping guide the department's debt management, and it shared thoughts essentially on tokenizations and stablecoins, including warning about the risk from Tether. Goldman Sachs and Citigroup are warning the US Treasury about Tether. Tokenization, this is what was said on the report. Tokenization has the potential to unlock benefits of programmable and interoperable ledgers to a wide area of legacy financial assets. The report suggested especially highlighting the possibility of instant and transparency settlements and clearing for reducing the risk of settlement failures. Even small increments in improvements essentially in a very large market like the Treasury market can be impactful at the scale, the report noted. Though it also suggested caution and likely need for developments of a privately controlled and permissioned blockchain managed by one or more trusted private or ledger, essentially private or public authorities. The way forward should involve a cautious approach, spearheaded by a trusted central authority. With widespread buy-in from private sector participants, it concluded. The report also delved into the rise of stablecoins, which have an increasingly elected to hold significant short-dated US Treasury collateral, a situation that will probably be further encouraged by further regulations. It also included a thought on the stability hazards from tokens such as USDT Tether. A collapse of a major stablecoin like Tether could result in a fire sale of their US Treasury holdings. The report said if history serves as any guide, stablecoins will need to be regulated like narrow banks or money market funds to prevent a contingent of stress in stablecoin markets, the broader financial markets, and the treasury market. When it comes to stablecoins underpinning tokenized essentially transactions, the advisory suggested that central bank digital currencies, CBDCs, will likely need to replace stablecoins as the primary form of digital currencies. This is a report from the US Treasury with the help of Goldman Sachs and Citigroup. And in that report, it stated, just to repeat that one little line, central bank digital currencies, CBDCs, will likely need to replace stablecoins as the primary form of digital currency. CBDCs replacing stablecoins as the primary form of currency. Any potential CBDC issued by the Federal Reserve would be managed by private sector banks. Fed officials have said, meaning some of the institutions represented in the advisory group. However, a political chance for the US CBDCs were strongly opposed by Republican lawmakers, remaining dicey in the near term. It's true. Republican lawmakers and Trump are very against CBDCs, which I understand. Who wouldn't be against CBDCs? But the world is moving towards CBDCs. So Republicans and Trump can only stifle CBDCs for a while before they do happen. Overall, the voices of traditional finance behind the report saw tokenization in all types of kinds of markets for real-world assets and promises to unleash new economic agreements. Though doing it for short-term treasuries could potentially disrupt the banking systems, according to the committee, because it could become a rival for bank deposits, which is true. CBDCs are going to become a rival to bank deposits. Now, here's one interesting factor, and it goes back to what I said. The report had a diagram, and on the report diagram, it had bubbles, and each bubble was a vote, essentially. So one vote was, why would banks and institutions... So the question was essentially, what benefits do you the most of going into tokenization? And the answers had votes. One answer said, for example, it's faster settlements for tokenizations, and it had some votes. One answer said, it's more transparent, and it had a lot of votes from institutions and banks. And there was a lot of answers and questions and votes. But the biggest bubble in the diagram had the answer of, it's a new revenue stream. As I said previously, banks and institutions are essentially going to be the only ones that benefit from tokenization projects. If you're a member of the retail section and you buy into a tokenization project of an institution that's going to be building a building, if an institution is going to be building some sort of a hotel and you buy into their tokenization project and you own a tiny part of that project, that massive hotel, you own a tiny part because you brought into their tokenization. Yeah, who's benefiting at the end? The institution that owns a massive hotel, or you who owns a little part of it? And your benefit is you might get a free drink at the hotel bar. His benefit is he owns an entire building. Because before, the institutions had to go to the bank and say, we want to build a building. Here's our assets as collateral. Give us some money so we can build this building. Now, in the tokenization world, they can say, we're going to build a massive hotel. It's a tokenization project. Everybody get involved. Only one party benefits. Always remember that. In any sort of business dealings, only one party will benefit. But you can also benefit. There's only one way, as I said, be the backbone. Don't buy into the tokenization project, be the backbone. If they're building the tokenization project on the XRP ledger, go for XRP token. If they're building it on the AVAX chain, go for the AVAX token. don't go for the tokenization project. Go for the AVAX token if it's being built on AVAX. If it's going to be built on XRP, go for the XRP token because you're going for the backbone instead of going for the tokenization project. You're going for the backbone of that project. It adds indirect value to that token, whatever chain they use. Not financial advice any sort of a way, just basic common sense. Now, in Bitcoin, essentially, here is moving off essentially tokenization project and the US Treasury report to Florida. Florida's CFO proposes cryptocurrencies for pension stability. Now, a lot of pensions are actually moving towards Bitcoin ETFs. Now, if there are more alternative ETFs other than just Bitcoin and ETH, most likely we're going to see some sort of movements there as well. But Florida's CFO is aiming for Bitcoin ETFs, and he's not the only one doing pension funds in that sort of manner. For example, South Korea, the biggest pension fund, private company owned in South Korea, their pension funds are in Bitcoin ETFs, and they own Coinbase shares. Two other pension funds inside of the United States are also towards Bitcoin ETFs. The first time ever a university invested $6.1 million, $15.9 million into Bitcoin ETFs in the Grayscale Mini Trust Bitcoin ETF, which is and how we know this is due to their filings with the SEC. But here it is. In a move that could redefine Florida's approach to financial security, the chief financial officer, Jimmy, has proposed to create a state-run Bitcoin reserve aimed at supporting the state's pension funds. The project, which essentially patrons analyze in detail, is a unique to state, and it can be described more precisely as launching a digital gold reserve account with the ultimate purpose of creating the hedge for the state financial assets and potentially rebalancing some of the additional and traditional single type of assets and risky / excess capital dependent on portfolios. Patrons highlighted that the potential role of Bitcoin is essentially in acting as a safeguard against economic instability and unpredictability of traditional asset classes. Establishing a Bitcoin reserve may help Florida better navigate the world of financials and how much shift is happening effectively. And given the fact that cryptocurrencies play an increasingly significant role in the global markets, aimed at continuing discussions on inflation exceeding fluctuating markets and central bank policies, patrons revealed that Bitcoin could be of value for Florida value, since traditional equities and bonds are sensitive to interest rates, whereas cryptocurrencies are really not. Cryptocurrencies react the opposite to essentially interest rates. Whenever we have a rate cut, crypto reacts in a positive way because it's a hedge against that type of scenario. A rate cut is an indication that an economy is not doing too well, which means people will start going towards alternative assets. A Bitcoin fund might present the state which a way to offset its many risks. Bitcoin is often referred to as digital gold, Jimmy Patron said, in regards to essentially comprehensive value to gold as a store of value. Despite the potential, which is essentially by Patron's proposal, some analysts opine Bitcoin has issues such as volatility and regulatory structures and the essential perception, which could be tricky. That is so, Bitcoin is erratic and these price swings could pose a problem for pension fund investments. Yet, according to supporters, although it may pose certain risks, the Bitcoin development trend has recently become more stable, which makes essentially that worth it if Florida is to possibly add Bitcoin to the list of reserves for its public pensions. Other states will follow the same move as a policies, which they will. If Florida does this, then it's definitely going to be doing it. Essentially, any other pension fund is going to be following them as well. Evolving, essentially, accepting cryptocurrencies as legal of their investment weaponry. If Florida does this movement, if the CFO of Florida, Jimmy Patron, does make Bitcoin the backbone of their pension funds, then more states are going to be following Florida's footsteps of making crypto assets the backbones as an alternative hedge to traditional market space, which is amazing to see. Because we have seen pension funds going towards Bitcoin ETFs, mainly towards the United States. I mean, Wisconsin essentially invested roughly about $100 million plus. Now, moving essentially away from the pension fund of Wisconsin to the critical, essentially, voting that's coming up. And what I'm referring to is not the other critical voting, which is Trump versus Kamala, but the other critical voting, which is Microsoft. Microsoft is going to be going through voting on if they should be entering into the crypto markets, and starting with Bitcoin ETFs. So before we go through that news, let's go to the comment section first. As I said, this is a live, which means if you do have any questions, put it down in the comment section. I'd be more than happy to answer any questions you may have. Now, let's just go inside the comment section first before we go for the next news, which is regarding Microsoft doing votings if they should enter inside the Bitcoin market space or the cryptocurrency space in general, starting with the ETFs. A relationship between the significant, okay. They can freeze Tether addresses and wallets. Yes, yeah, they can. Is there a true and significant? So Scott has asked the question of, is there a true and significant relationship developing between Iran and the Saudis? Yes, up to a certain extent. Yes, there is. Yes, I just seen that notification pop up. I wonder what that's all about. Yeah, same. Miles, your internet connection is very poor today. Is it? It keeps on freezing. I will just be wondering. All okay now, though. Okay, I was just wondering if that was just bad connection. I don't know. I have incredibly fast internet. I use Virgin broadband, the fiber optic something. Very surprised. But no, we're good. All good now. Let's go. But yes, Saudis and Iran, they're developing some sort of a relationship with each other. But Saudi has a relationship with the United States as well. Very big relationship with the United States. Now, but also due to the geopolitical tensions that's going on in the Middle East, is Iran going to retaliate towards Israel, or is Israel going to get prepared for another attack? Israel is going to prepare for another attack towards Iran, just to keep that in mind. Iran is also going to be retaliating towards Israel. This retaliation back and forward is eventually going to lead into a war with Iran versus Israel, is what's going to be happening. So it's going to go back-to-back retaliations, and until somebody hits the wrong place, because Israel is doing missiles towards Iran, Iran is doing missiles towards Israel, and if one of those missiles goes somewhere it shouldn't land, then that will start a war between Israel and Iran. For the time being, they're both doing coordinated attacks. Well, Israel has done very, very good coordinated attacks on Iran, and Iran has done just random missile attacks to Israel. If anybody's wondering, watching this for the first time ever, and thinking to themselves, why am I qualified to talk about, Iran versus Israel? It's because I'm Persian, I'm Iranian. Just in case if anybody's wondering, why am I qualified to talk about the Iran and Israel situation? I'm Iranian, if anybody's wondering. I'm Persian. And Israel did coordinated attacks on Iran. They hit factories that were building missiles in Iran, factories that Iran put them down as food factories. So there was a factory that was apparently supposed to be making cookies and biscuits, was making missiles, and they got hit in Iran. But yeah, Israel did strategic attacks on Iran, while as Iran was just sending random missiles. Okay, connection has been a bit on and off today. Yeah, it has. Well, now I've just realized it has. Jay Nelson just put, no, it's not. I don't know what that means. Happy Pisces says, those issues between the countries you mentioned getting escalated makes the US dollar stronger, and we can see a drop in crypto. Yes, we can. I mentioned this yesterday as well. I said the crypto market is reacting in a positive way as we get closer to the elections. Okay, I said as we get closer to the elections, the crypto market is going to be very hyperactive. It's going to be reacting as we get closer to the elections, which is about 5 days, essentially 5-6 days maybe off. So as we get closer to that, the market is going to be reactive, which they are. They're reacting in a positive way. I mean, Bitcoin is reaching almost $73,000 now. It's at 72,000 something. And then, if Trump is chosen for the next president of the United States, the markets will react even more in a positive way. I said also we're going to be having rate cuts, a perspective coming from BlackRock CEO, which is going to have another positive reaction on the crypto market space. But, however, I said there are two things to factor in for a downtrend on the market space. One being if Kamala Harris is chosen the next president. Every single report that's came out from any sort of bank or institution out of Wall Street have all indicated that if Kamala Harris wins, the crypto markets will be reacting in some sort of negative way. Not drastic drops, but not on an uptrend anymore. And I said geopolitical tensions can bring the crypto markets hype that's going on right now back down again. And there's a massive geopolitical tension between Iran and Israel right now. So I said, keep that in mind, that if those two countries start doing missile attacks again, then the market will react in a negative way. Even though the market is excited about the elections, a geopolitical tension will bring the market back down again, especially if it goes into a full-blown war. And David asked the question of, do you support Iran or Israel? David, how I will answer that question is, I don't support the Iranian government. I support the Shah of Iran. So I'm in favor of the Shah of Iran, the king of Iran, to come back. Reza Pahlavi II. I'm in favor of Reza Pahlavi II to come back. There's a lot of people in Iran who want the Iranian government out. And there's a lot of people happy in Iran that Israel is actually striking the Iranian government. And Israel wants to replace the Iranian government with the Shah of Iran. So I'm in favor of the Shah of Iran, not the Iranian government at all. And I know too much which I can't reveal on this live. On live anyway, to be fairly honest. But I support the Shah of Iran. I will never, ever support the Iranian government. Not in a million years. I will always support the king of Iran. Not the Iranian government, the king of Iran. And Israel is going to be the one to take out the Iranian government to put the king back. Now, moving on. Critical Bitcoin. Investments. Votings is what's happening essentially in Microsoft. Critical Bitcoin investments pre-voting begins at Microsoft. Here's what to know. Microsoft shareholders have begun voting about if they should be holding crypto assets in their portfolios. Now, Microsoft is apparently going to be voting on 1% of their entire assets should be held in Bitcoin ETFs and other crypto alternatives moving forward. Expanding from that 1%. They're going to start with 1% of Bitcoin ETFs and then 2%, 3%, 4%, so on, keep on going to more crypto assets. But the pre-voting apparently started already. So Microsoft shareholders have begun holding essentially votes on whether the tech giants should explore investing in Bitcoin. The proposal, which is among the topics of Microsoft's annual shareholder meeting, proposes the company considers Bitcoin as a hedge against inflation and other macroeconomic factors. The proposal was essentially detailed in a Form A filing with the US Securities and Exchange Commission. The proposal argues that Microsoft's current investment in corporate bonds is not efficiently enough, outpacing inflation, and suggests that Bitcoin is a potential strategy to diversify their company's asset portfolios and increase their shareholder values. Shareholders will formally vote on the issue at the annual meeting that's coming up. However, Microsoft boards of directors recommend that shareholders reject the proposal. The board of directors noted that the company already has a solid asset management strategy and does not see the need to essentially invest into Bitcoin. Microsoft's management team clearly, essentially, or carefully considered this issue and determined that the company's current investment strategy is well suited to achieve a long-term goal, the board said, adding that the current diversified portfolios can withstand macroeconomic challenges and changes without exploring the additional investments inside the market space. So Microsoft directors are going to be going through some sort of voting season towards the end of the year. Are they going to be going towards Bitcoin ETFs or Bitcoin assets or crypto assets in general moving forward or not? Some directors are already against the idea and they're saying, don't even bother voting, let's just reject it straight away. But they're going to put it to a vote. If the vote comes through, Microsoft is going to be the next biggest American institution to enter the crypto space for the first time ever. It's massive news on that matter. But let's see how the voting season goes. Now, what we're going to talk about next, moving away from Microsoft's essentially voting season to Coinbase. Coinbase shares drop after hours on quarter-3 earnings miss. Shares of Coinbase Global Inc., Coin, dropped nearly 3.7%. So Coinbase's reports have come out, and Wall Street was surprised. Wall Street thought to themselves that when the quarter-3 reports from Coinbase come out, that it's going to be a positive, that Coinbase has had a lot of inflow of money coming into the crypto space, and Wall Street was going to be happy with the results. Wall Street was not happy at all. Hence why the markets today were a little bit red, not drastically red, but 0.06% red. Because of this, the shares of Coinbase's Global Inc. Coin dropped nearly 3.7%. And essentially, after hours trading, at its third quarter 2024 results for earnings and revenues came into Wall Street's estimates, with the crypto exchange blaming softer market conditions. Coinbase's quarter-3 results shared essentially on today essentially show revenues hitting $1.13 billion, up over 81% from the same quarter a year ago, but missing Wall Street's analyst forecast of revenues of $1.26 billion by nearly 11%. The crypto exchange's earnings per share came into essentially 28 cents, missing the analysts' expectations from Wall Street of about 45 cents a share by 46.5%. Cryptocurrency exchange Coinbase reported third quarter revenues of $1.13 billion, falling short of analyst expectations of essentially of $1.25 billion. The cryptocurrency exchange also reported net income of $75 million, marking the 7th consecutive quarter of positive adjusted EBITDAs, essentially of $449 million. In a statement, Coinbase described the third quarter as a solid performance across its key priorities for 2024. Increasing revenue, expanding crypto adoption, and securing regulatory clarity. Despite the softer market conditions, Coinbase said, the company saw growth in staking, on-platform USDC, and custody services, which helped diversify its revenue streams. They also said, we continue to build a great product, focusing on some of the core building blocks that are now available to help onboard 1 million users or 1 billion users to the chain, Coinbase said. One of the most important developments in quarter-3 was the integration of stablecoins across product offerings and the growth of Base Network. Coinbase has highlighted Base Network's success, claiming that it is now leading Layer 2 networks in terms of both transactions and total value locked in. Coinbase noted that the upcoming 2024 US elections represents a critical turning point in the ongoing efforts to achieve regulatory clarity for the crypto industries. The company pointed out that the growing influence of tens of millions of American crypto holders, especially in swing states, as a powerful voting bloc advocating for pro-crypto legislations. Coinbase has partnered with notable advocacy organizations such as Fair Shake, one of the largest non-partisan political action committees, and Stand With Crypto, a grassroots group of approximately 1.8 million advocates. They said, as we look beyond Election Day 2024, we are prepared to work with both administrations and believe the prospects for pro-crypto legislations are better than ever, the company said. Coinbase has basically said that, they're up for whoever side wins. They couldn't care less. Coinbase just wants the world or the United States to be pro-crypto. They couldn't care less of who wins the next election. Just be pro-crypto, essentially, is what Coinbase said on their reports. And Coinbase said, even though Wall Street was expecting us to do a little bit higher on the numbers, Coinbase said we've achieved more than enough, or higher than ever before. Sure, we didn't hit the numbers Wall Street thought we were going to reach, but we're still higher than before. But Wall Street doesn't care about that. Wall Street doesn't care about speeches. Wall Street cares about money. And because they didn't hit the numbers, Coinbase's shares dropped by 3.7%. Even though Coinbase put out a very nice speech saying that we've achieved a lot. We've done, we've reached we're going to be reaching billions of users, custody services, more companies are joining us. Wall Street couldn't care less. They care about numbers. Millions. They care about the essentially millions of dollars that were missed out on the numbers. Now, moving away from Coinbase's essentially reports not reaching those figures, and this was essentially a reasoning of why the markets slowed down today, because Wall Street was not happy with the numbers of Coinbase's quarterly reports. But the crypto market didn't react in an extremely bad way. I mean, Bitcoin was down, what, 0.06%? Now, what we're going to talk about next is UBS. UBS thinks the US elections will affect global markets no matter who wins, which is a fact up to a certain extent. UBS is correct. No matter who wins, the global markets will be affected. If Trump wins, the global markets will be affected in a positive way. If Kamala wins, we're all doomed. So yes, it is true. Doesn't matter who wins, the global markets will definitely be affected. But before going through UBS's report, let's go to the comment section first. If you have any questions, don't be shy. This is a live, which means if you do have any questions, put them down in the comment section. I'm more than happy to answer any questions you may have. Now, let's see what's going on in here. Make me a mod so I can kick out the camel. Make me a mod so I can kick out the Kamala voters. No, don't do that. Leave them in. Miles, you say that they will shut in when it was going for happening. Lados, you got to be a little bit more elaborating on that. Trump 2024, let's go, Cheville. Trump 2024, nearly done $10, sitting at $201. Let's go. Now, UBS. UBS thinks the US elections will affect the global markets no matter what happens. UBS sees global markets on the edge as the US presidential elections nears. UBS Group AG CEO Sergio warned that whether it's Kamala Harris or Donald Trump in the White House, the impact will cut deep across the markets, the global markets. He said the outlook for the fourth quarter is clearly still somehow influenced by uncertainties we see on the microeconomics and geopolitical fronts. He went on to say on a essentially CNBC interview that he called the elections not going to be an eventful event. UBS, America's divisions, especially the UBS, which essentially alone is ranked $2.84 billion in last quarter, is critical to UBS's wealth management revenues, a big player to UBS's profits. Sergio didn't menace with words about the stakes. He said, we do expect, no matter who wins and the outcome, we do expect some sort of market movements. And it remains to be seen how investors will react, he added. That's the line straight from the top of UBS's market reaction, not election results, is where the big shifts will come. As November 5th looms through, essentially, both big money and average investors are embracing themselves for what's going to be coming. The markets have already shown signs of caution, with polls heating up and economic policies on the line. Assets like gold, the usual safe havens, spiked to record highs. Meanwhile, the 10-year US Treasury yields lost some sort of recent gains after a strong start earlier this week. The jitters extended beyond gold and treasuries as UBS and investors across the board wait for clues on rate cuts from the US Federal Reserve. Whoever takes office will inherit a hefty budget deficit, expected to hit $1.8 trillion by the year's end, and likely won't ease spending anytime soon. UBS is tracking how these numbers will play out. A tighter race between Harris and Trump could mean policies that impact international trade and American budgets more drastically. Vice President Kamala Harris, seen as Joe Biden's torchbearer, inherits Biden's one-term economic legacy of acts like the Inflation Reduction Act and CHIPS and Science Act. On the other side, Trump's policies are attached into trade reworks, including tariffs on China. But for Europe, who wins may make a little difference, as many leaders anticipate a layer of US trade, essentially protectionism, either way. Both camps will drive up already ballooning US debt, now estimated by the IMF to hit 7.6% of the GDPs by year's end. The Congressional Budget Office forecasts the deficit could jump to $2 trillion in 2024, hitting 7% of the GDP, and may go as high as $2.8 trillion by 2034. This major factor for Sergio, who blatantly essentially laid out UBS's worries. He said, generally speaking, it's our concern that the public debt and government debt is increasing all over. In the world, he stated, he expects debt issues to play out over time, but doesn't expect immediate relief, given the depth of existing financial commitments. UBS isn't essentially taking any chances. According to Sergio, the bank is keeping a close watch on clients, helping them navigate these uncertainties. UBS is well positioned to navigate any environment, he said, highlighting their very strong capital and balance sheets as a buffer against whatever the elections throws their way. For UBS, whose quarter's net income surged to $1.4 billion, almost twice the $783.8 million expected, there's no rooms for scaling or slacking. The results benefited from steady lending income and careful cost cutting. On the other outlook, UBS flagged potential setbacks are on the way. The bank noted that while the US soft landing seems possible, global economic growth remains very shaky. It expects interest incomes to drop in Q4, with seasonal cost optics adding to the pressure. The quarter results have closed in what Sergio called the periods of high volatility, with global markets barely getting a breather from economic and political shifts. Adding to its load, UBS continues its merger with Credit Suisse, its former rival taken over last year in emergency bailout. There's more in one store, as UBS faces Swiss political scrutiny as well over its capital levels and could see additional $25 billion required imposed beyond the American elections. And UBS's integration efforts, crypto marks, are also in the volatile zone. Bitcoin in particular is inching towards a breakthrough. The token is close to breaking out of a 7-month consolidation range. While the market is eyeing all-time new highs this week, Bitcoin finally rallied to trading around $71,910, which is true. UBS has given the most comprehensive report so far, without a doubt. Every other essential organization out there every organization out there has made their reports very simple. Kamala wins, we're all doomed. And that's not a perspective from just one small company or so on. Wall Street. Wall Street said if Kamala wins, they're all doomed. If Trump wins, the economy will be in a positive state. Deutsche Bank, Goldman Sachs, JP Morgan, Franklin Templeton, even Singaporean analysts, a Singaporean analyst from Hong Kong analyst and Japanese analysts, they've all stated, and Saudi Arabia, Blackstone, that was yesterday, they've all said the same things. Trump wins, the economy is going to be fixed. Not is fixed, but is going to go towards being fixed. Kamala wins, the economy will be an absolute, simplest way to put it. But this one was very comprehensive. And they said something I already said a while ago, which is the entire world is on shaky grounds right now. It's what I said a while ago. China has a massive real estate problem. And this is what they're describing. They're describing the entire world is on a shaky ground right now. China has a massive real estate problem, which they're boosting their markets with $1.4 trillion, which sounds great, but for how long? Before that bubble burst. We had one Chinese real estate company, who was massive, by the way, collapse, and it took down the stock market and the crypto market with it. Now imagine the entire real estate market of China going. So We're back. I don't know why that's happening. China's on essentially shaky grounds with their real estate market space. And then we have France also with a shaky real estate market space. And then we have Germany with a shaky automotive industry space. And a lot of other countries going through their own hurdles and bubbles. The entire EU is pretty much done for. They're on complete shaky grounds. Now, the US is also on shaky grounds. Because of Joe Biden, because of Kamala Harris, no matter how you take this, because of Sleepy Joe and the Biden administration, Kamala Harris, they're the reasons the US economy was essentially on shaky grounds. They essentially funding the random wars was a terrible idea. Because when you fund a war, yes, it fixes the US dollar. When any war starts around the world, the US dollar becomes a safe haven. It goes up in value. It becomes stronger. But the issue is that means they're printing as well. It means they're printing, sending, war starts, US dollar becomes strengthened again. You see what I'm going? It's just one repeat cycle. So the economy of the US, just like anywhere else around the world, is on shaky grounds. And they're going to be giving this very, 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 very shaky economy to Trump, which is the perfect guy to be able to fix it, to be fairly honest. But it's a very difficult task. Look, I hope Trump is able to fix it, because the damage that Joe Biden and the damage that Kamala Harris did to the economy is beyond horrendous. And they're giving a very, very shaky market, not just the US market, but the global market to Trump. Because as the Bank of International Settlements puts it, if the American markets sneeze, the world market catches a cold. So they're giving a very, very, very shaky market, the global market, to the next president to fix the global market, not just the US market economy, not just the US economy, the world's economy. Whoever's next president of the United States is going to be fixing the world's economy. It's either going to go more or slowly starting to fix up. So I hope Trump can fix it. I genuinely hope. Kamala can't fix it. If Kamala's president of the next United States president, if Kamala's the one that's chosen, we're doomed. The US economy is just going to go, and the world economy will just follow and just go, which would explain essentially why Warren Buffett sold majority of his stocks and kept it in cash, waiting for some sort of a drop, which would also explain why, and also to point out, Warren Buffett, the last time he sold his stocks and kept it in cash was before the 2008 collapse. About 2 years before the 2008 collapse, Warren Buffett sold the majority of his stocks and kept it in cash to buy back inside the market space. And then we had the 2008 crash, which then Warren Buffett ended up buying a lot more and coming back into the game. Warren Buffett has sold the majority of his stocks and is holding in cash. Quite a lot of stocks he's holding in cash. Michael Burry, the man who essentially was able to find out the 2008 crash scenario, is also prepared for a market crash as well. There's a lot of high-profile investors preparing for a market crash because the economy is on such shaky grounds. It needs a miracle to fix it. It genuinely needs a miracle to fix it. So he's the only man that can fix it, and I hope he can fix it. It's basically what UBS Bank is saying. UBS Bank is trying to say the global market is on shaky grounds. The US market is on incredibly shaky grounds. He might be able to fix it and he might not be able to fix it. But UBS Bank is saying we're prepared for either outcome. That it's all going to be good, everybody walking into the happy sunset, or it's going to be doom, gloom, and rainy. So UBS Bank, this is why I say they've done a much more comprehensive report saying that the only thing that can save the world economy is a miracle. So keep that in mind as well. And this is all because of Sleepy Joe and the Kamala Harris OF chick. But yeah, it's not good. Now, and there's a lot of high-profile investors, right now sitting on the sidelines, waiting for that bubble to burst. Now, Bitcoin is what we're talking about next. Moving away from the very, very comprehensive report from UBS Bank, because the other reports that came out and said essentially Trump is the better option, which it is without a doubt. Kamala is the worst option, was the previous reports from all these banks and institutions around the world and Wall Street. This one, a lot more comprehensive, a lot more detailed from UBS Bank. Now, also, they said so far the market looks like it's going to do some sort of survival because crypto is reacting in a positive way. Now, also just to point out, if we do have a massive market collapse, then the ones that see it coming are going to be hedging against it. So if they price in some sort of a collapse happening, then the ones that see it coming are going to hedge against it in crypto assets. And this was discussed on Bloomberg by a billionaire hedge fund, which he mentioned that we're seeing a market collapse on the way, and then we're hedging against it using alternative crypto assets. So market collapse is actually good for crypto. Now, because there's traditional market space that's collapsing, not the crypto. Obviously, crypto will be impacted as well, but a lot of inflow is going to be happening at the same time. A little bit of time passes. Now, Bitcoin volatility is what we're going to talk about next. Bitcoin volatility surges in Japan. Bitcoin's volatility has hit new highs in Japan, as BTC, the JPY pair, has surpassed BTC's USD in 90-day realized volatility. This marks the first time since 2022 that Bitcoin and the Japanese pair has been more volatile than the US counterpart. Japanese market conditions, especially following last week's general elections, played a significant role as essentially in this shift. The Japanese yen is under essentially increased pressure. Investors are hesitant towards the yen, which is near multi-month lows. The yen's weakness has made Japanese assets, including BTC JPY, more volatile. The heightened volatility behind BTC JPY pair reflects the vulnerabilities and increased market uncertainties. Even the Japanese market space is on very shaky. The entire world is on shaky grounds. The Japanese recent elections outcomes added further unpredictability to the market. Investors initially hoped for the general elections would stabilize the Japanese yen. Instead, volatility rose, impacting major currency pairs, including BTC and JPY. The BTC-JPY pair now has a volatility rate above 50%, while BTC's USD lags slightly below. But here's the good thing, as I'm saying, if the world is going to be on shaky grounds, then the world is going to be hedging against that scenario. How do you hedge against traditional assets? By going for an alternative asset. An alternative asset is a digital asset. So a collapse and a restart, basically, is one of the outcomes. Just to point out, it's not the outcome, it's one of the outcomes. A collapse and then restart. In contrast, the BTC, essentially USD markets, has remained relatively stable. Though the US dollar faced pressure on its own on BTC USD volatility, it remained more controlled than BTC JPY. As the US elections approaches, however, traders are essentially preparing for possible volatility spikes in the BTC USD markets. Analysts expect that post-election developments could influence the pair stability. The Japanese yen struggle, raised concerns among Japanese investors. Despite a general preference for safe assets, the yen's weakness continues to discourage buyers. The yen's current levels make it difficult to attract new investors. This sentiment has pushed some investors towards alternative assets, contributing to the increased volatility of BTC. Do you see where I'm going with this? If more people are seeing essentially the traditional market space is going through more turbulence, they're going to hedge against it with digital assets. Bitcoin's role as a hedge against traditional markets also supports its popularity in Japan. Aimed at economic uncertainty, Japanese investors are exploring Bitcoin and other crypto assets. This trend has amplified BTC's JPY pair volatility as market participants react to broader financial conditions. With major elections in both Japan and the US, markets are bracing for more uncertainty. The yen's vulnerability, coupled with the upcoming US elections, presents a dynamic outlook for BTC traders globally as BTC JPY volatility suppresses essentially BTC's USD. Investors are watching both markets for potential shifts. So, as more volatility is happening inside the traditional market space, investors are moving towards digital assets, which is great, absolutely great to see. It's the only way to hedge against it, which it comes back to that bubble burst, collapse, restart, and everybody's inside the digital assets. Now, Wellington, a essentially asset manager, has decided to join the crypto space. A asset manager, Wellington, taps into a crypto project that I shared on this live a while ago when it first opened its doors. And that was Ondo. Ondo Finance, essentially ONDO. Wellington taps into Ondo Finance to help with tokenized US Treasury funds. Asset manager Wellington Management has joined forces with Ondo Finance to enable real-time liquidity for its new tokenized US Treasury funds. Wellington Management, which manages over $1 trillion in assets, has partnered with blockchain-based finance firm Ondo Finance to enhance liquidity in its essentially newly launched tokenized US Treasury essentially fund. This collaboration is a part of a broader initiative to integrate traditional assets like US Treasury bonds onto the blockchain for easier access and management. Tokenized assets are digital representatives of the real-world financial assets on the blockchain. In case Wellington's finance tokenized US Treasury funds allows essentially, in case the Wellington's tokenized US Treasury fund, allows investors to purchase digital tokens representing shares of Treasury bonds, a low-risk asset class often used by institutions for stability. Through Ondo's technology, investors in this fund can now access in-trade liquidity, enabling them to sell or redeem their tokens at any time during the day. This liquidity is particularly useful for investors using these assets as collateral inside the financial transaction space. The collaboration will use Ondo Finance's 24/7 redemption technology so that investors can exit their positions anytime throughout the day. A feature valuable in global financial markets where assets may need to move across borders. Wellington's fund also aligns with the standards set by tokenized assets like SGD Delta Fund, which essentially received a high credit rating, adding credibility and security to tokenized investments. So, essentially asset manager has just joined Ondo Finance. Wellington Management has just joined Ondo Finance. They're going to be going to tokenization, and they thought that's the best project for us to enter inside the market space with. It's actually great news for Ondo Finance because companies or management companies like this going towards Ondo Finance is going to make more management companies or family businesses inside of Wall Street move towards Ondo Finance. And just to put in perspective, Ondo Finance has the biggest portfolio inside the BlackRock built essentially fund as well. About $95 million of investments into BlackRock's build, essentially what Ondo Finance has. Now, moving away from the essentially announcement of a partnership between Wellington Finance and Ondo Finance, Wellington Management and Ondo Finance, to JP Morgan. JP Morgan CEO Jamie Dimon pushes back on the unfair US banking regulations. So it's not just the crypto space that's hating Gary Gensler. The banking sector is also hating Gary Gensler as well. Well, there are reasons for it. JP Morgan CEO Jamie Dimon has recently declared that certain US banking regulations are essentially endangering the stability of financial sector. At an American Bankers Association event, Jamie Dimon said some of the regulations were unfair and unjust, and that bankers should fight regulatory outreach. This remark reflected worries about the rules and affected businesses and consumers, which he essentially positioned a call for balancing in terms of regulations. Now, what Jamie is actually annoyed about is that crypto assets have to be held as liabilities on bank balance sheets. Banks actually want to be inside the crypto space. In the United States, banks want to be inside the crypto space, but they have a difficulty. That difficulty is the SEC. So, Jamie pointing out the complexities of banking rules inside the United States, Jamie said that overlapping regulations means ample red tapes for financial institutions. He said the regulatory overlap fairly harms lower income, essentially consumers, as banks are forced to pass along compliance costs. And Jamie highlighted a series of lawsuits JP Morgan has launched against regulatory bodies, saying that litigations is designed to push back on what he sees as regulators going too far. So Jamie essentially is getting prepared for war. Jamie also said that in many banking industries, we're afraid of doing so, to go after the regulators, he said. And that we need to do this more often. In an interview that he did, he said that the Federal Reserve essentially contacts told him his criticism about regulatory matters is putting a target on his back. The Federal Reserve, just to point this out, this is Jamie Dimon, CEO of JP Morgan, said on an interview that the Federal Reserve contacted him, members of the Federal Reserve contacted him and told Jamie, the CEO of JP Morgan, that if you continue this act of going against us, you're going to put a target on your back. He said, I have been told because of what essentially you have said and what you have wrote about, you know they are coming after you, reflecting frustration between banks and regulators. He also took an issue with the endgame proposal from July 2023 under Basel III, the regulatory framework designed to align US bank standards more closely with international norms. The proposals are aimed to make banks more resilient, but Jamie said that the surge that's happening for globally significant banks is too high and could be very harmful. He described the capital surge as a ridiculous, essentially arguing that essentially a balanced approach was required to avoid excess weight falling upon the big banks. The biggest problem I have with all of these overlapping rules is that we are not stepping back and saying we could do better to make the system work better. He said, the capital demands hikes are aimed at ensuring that the banks will have a sturdy financial base to observe this position, claiming that its requirements, along with the current capital surges, may essentially exaggerate the banks by restricting their lending and its effects on economic growth. By all amounts, resilience is key, but this approach must be recalibrated, he says, to maintain an industry on the plateau without removing its ability to grow. Jamie also addressed the CFPB regulations directing traditional banks to team up with fintech firms in sharing data. So this is what Jamie is essentially against mostly as well. Which is actually good news. This part is very good news for the crypto space. But I can see why Jamie is against it, because Jamie's a banker and bankers don't like to share. Bankers don't like to share their money. Bankers don't like to share their data at all. I have banker friends and I know that very well. So on that matter, that's also pointing out to a very vital thing. So the Federal Reserve is making banks share their data with fintech companies. Which fintech company do you know that's inside the banking sector? Ripple. It's the key player inside the banking sector. There are some other ones here and there, but the key player is Ripple. It has the licensings, the correct licensings to be able to operate. And apparently banks now have to share with fintech companies. And that's an order from the Federal Reserve. And Jamie's not happy. While Jamie stated that he saw a positive with regards to the banking essential idea, his fears about data breaches and fraud are immense. So the CEO, just to get it right, the CEO of JP Morgan is afraid of misuse. He's afraid of breaches and fraud. The CEO of JP Morgan is afraid of fraud. JP Morgan was moving money around for Epstein's Island. JP Morgan was moving money around for Diddy. JP Morgan was moving money around for the cartels. JP Morgan was moving money around for a lot of illicit activities in the Middle East. But JP Morgan CEO is afraid of fraud and misuse with sharing data with crypto firms. How does that one work? JP Morgan has pretty much ticked off everything possible to do on this planet. Any sort of fraud activities, JP Morgan's dirty hands are all over it. But sharing data with crypto firms is when it starts to go south for them, apparently. He said the CFP essentially regulations in an effort to add transparency would just put more consumers' information at risk. No, it wouldn't. Transparency is actually good for the banking world. To be fairly honest, all banks should be transparent. Maybe then the illicit activities can stop. I like how JP Morgan is saying, we care about our clients, is what JP Morgan is saying. We care about our clients. Just to point out, JP Morgan got fined for selling unnecessary things to their clients inside the banking sector. One banking, essentially, he said, open banking is designed to give consumers more control over their financial data, enabling them to share that information with third-party fintech apps for personalized services. Yet, Jamie said the CFBP may not have a proper checks and balance in place to protect consumers. The JP Morgan CEO said that while banks is not adverse to litigations, it would rather save suing when it is needed to defend industry interests. Jamie also comments on US banking regulations, provides a broad context to his request for systematic change, stating that a regulatory framework must strike the right balance between industry growth and burdensome regulations. JP Morgan CEO Jamie is also trying to speak out against current policies for what he believes they are over-regulation, arguing that the financial system requires clear, fair, and balanced rules in order to grow. I agree, Jamie, what you said here. The financial system requires clear, fair, and balanced rules to grow. So why don't you apply those words to JP Morgan? What he said reflects a general view in the industry that regulations need to be essentially considered as far as managing and assessing, but also protecting consumer interest. What an absolute load of BS. Jamie is an absolute crybaby. The simplest way to put it. The CEO of JP Morgan is one big, massive crybaby. Because he has to start sharing data with essentially crypto companies, and there's an order from the Federal Reserve, he's crying about it. So, no, I don't want to share data. Because everything's going to start going south. Fraud is going to be happening in the banking world. Fraud happening in the banking world. I think the banking world has achieved the accomplishment of fraud by themselves already. Adding crypto to the factor doesn't make a difference to it. To be fairly honest. Now, but that was actually good to know regarding the Federal Reserve giving an order to the banking world. They need to start sharing data. I think what JP Morgan is mostly afraid about regarding the sharing data part is that they might share too much data, which could get essentially JP Morgan even more fined from their illicit activities. Could be the Epstein Island situation from JP Morgan, or the Diddy situation from JP Morgan, or the cartel situation from JP Morgan, or the Middle Eastern situation from JP Morgan. JP Morgan has done a lot of weird behaviors. Now, moving away from the crybaby CEO of JP Morgan to how public essentially to Hong Kong. Hong Kong Stock Exchange is about to be doing something they've never done before, ever, which is essentially list the first ever EU regulated crypto index. Hong Kong Stock Exchange makes history today with the first ever Asia's first EU-regulated crypto index. The Hong Kong Stock Exchange is poised to make a significant leap in the financial landscape by introducing Asia's first EU-regulated crypto index on November 15th. This innovative step is expected to open up fresh investment avenues in Hong Kong, bridging the gap between cryptocurrencies and traditional stock markets. Financial markets view this initiative as progressive, a very progressive move that reinforces Hong Kong's status as forward-thinking financial hub and connecting, most importantly, connecting the Hong Kong Stock Exchange with the European market space. The new virtual asset index series from essentially the Hong Kong Stock Exchange will focus on major cryptocurrencies, starting with Bitcoin and Ethereum and so on, and then moving on to the rest. By adhering to the regulatory standards set by the European Union, this index aims to offer a clear and trustworthy real-time benchmark for crypto assets. Peter Chan, the CEO of Hong Kong Century Stock Exchange Group, highlighted that this index responds to the growing regional interest in digital assets, empowering the investors to make a well-informed choices and fostering a robust virtual asset market space. The index will determine the prices of Bitcoin and Ethereum using a 24-hour volume weighted benchmark, which essentially the market values from leading exchanges worldwide. Prices will be refreshed daily at 4 p.m. Hong Kong time and will be presented on US dollars, ensuring that Asia's benchmarks are in sync with global standards. So, Hong Kong, for the first time ever, this is, amazing to see that crypto or blockchain technology in general, blockchain technology is bringing two markets together. The European markets connecting to the Hong Kong Stock Exchange market space, which is incredible to see. And crypto was the one to do it. It's the first ever to be done. For an ETF, just to put that out as well. For an ETF. Massive. Now, moving away from essentially the Hong Kong's massive announcements that just came out to Ripple. How will banks tap into digital asset opportunities? Ripple released essentially a report. And on this report today that came out, I'm going to be reading at you the report and regarding what Ripple is going to be offering to the banking world and how many countries already work with Ripple that they've mentioned so far. So, as digital assets continue their march towards mainstream finance institutional crypto custody services, this is written on Ripple's own website, are becoming mission-critical offerings for banks looking to remain competitive. The ability to store, securely, manage, and safeguard crypto assets and essentially tokenized assets will determine whether banks are able to meet the raising demands for new asset classes and position themselves for the forefront of essentially the $20 trillion market space that's going to be happening. Amidst this shift, Ripple's new digital asset custody, a quick guide for banks, provides a blueprint for evaluating and deploying institutional-grade custody infrastructure to build, trust, drive, growth, and unlock new revenue streams. The digital custodian opportunity. The digital asset adoption is growing at a fever pitch because the inherent advantages enterprise blockchain affords, speed, transparency, can help improve cost, reduce fraud, and boost liquidity across a wide range of finances and use cases. According to the EY Parathon study, 64% of retail investors already hold digital assets, while another 69% plan to increase their investments over the next 2 to 3 years. Overall, up to 10% of all financial assets are expected to be tokenized by 2030. For financial institutions eager to essentially to carve out their share of the market space, leveraging a highly secure bank-grade solution for accessing and managing digital assets is a must. Many large global banks already offer traditional custodian services for financial assets, but must now extend their offerings to include institutional digital asset custodies or risk being overtaken by their competitors. At the same time, regional banks can deploy a new digital asset solution to compete with neobanks and capitalize on the growing opportunities in the regions with progressive crypto regulatory frameworks. Driving revenue from enterprise blockchains use cases. Banks are offering digital asset custody solutions, or what PwC calls it, the foundation of any digital asset business, are well positioned to serve the core custody needs of a range of retail and institutional clients. This includes institutional investors from hedge funds and asset managers to family offices who require secure and compliant solutions for managing large portfolios of digital assets, including tokenized real-world assets like securities, real estate, or even carbon credits. And by integrating digital asset custodies with existing essentially banking services, such as portfolio management or payments, banks can offer those institutional investors are seamless experiences across a variety of use cases and asset classes. Banks can also use Ripple custody to ensure their services are compliant with stringent regulatory frameworks across regions. So this is where Ripple is talking about now. For example, in jurisdictions like Hong Kong and Japan, recent government regulations are now requiring providers to keep essentially a certain percentage of customers' assets on cold storages. Beyond those essentially core services, banks that leverage Ripple custody maintain full control over their operating and security models, including flexible deployments or private key managements, which can also essentially bring a host of innovative new use cases to the market. These include institutional custody services that facilitate access to a tokenized securities registry platform, a sub-custody networks for global services coverage, or the elimination of manual reconciliation by tapping into a digital asset custody infrastructure in tandem. With tokenizations, banks can also support the issuance of custody commodities-backed tokens by direct investments in arenas like gold and rare metals. Proven trusted solutions. Ripple's custody service provides banks with all these advantages and more. Through a single fully integrated platform for all digital assets use cases, its institutional-grade custody infrastructure is secure, scalable, and highly customizable to accommodate a wide range of applications. Today, Ripple custody services financial institution customers across more than 15 countries, supporting the secure transfer of settlements of digital assets, of tokenizations, and managements of real-world assets. Time and again, Ripple custody has proven to reduce cost, enhance security, and amplify operational efficiency. As the world continues to embrace digital assets, the need for banks to support their clients' custody needs will only grow. Apologies about that. Well, it's good to know that who is using Ripple's custody services. So that was essentially what was said. Sorry, one second. That was essentially what was said. On Ripple's own website regarding custody services, regarding Ripple custody in general, but about the banks and so on. Amazing to see. Ripple custody service financial institution customers across more than 15 countries. And people will still tell you, nobody uses Ripple, nobody uses XRP inside the crypto space. This is why I say some people just need to get left behind. You know, there's just no easy way to say it. Some people deserve to be on CBDCs and get left behind. Because no matter how many times you tell people this company is about to be changing the world and this asset is about to be changing the world, people still go, no, I don't believe it. And those types of people, unfortunately, deserve to be on CBDCs and deserve to get left behind. Now, as you all know, around this live, once we get to the Ripple news, it's pretty much coming up to the end of the live, which it has already. So, all good things must come to an end, which they have right now. This was the CMF live. If you're watching this for the first time ever, this was the CMF live. And my name is Miles, the host of essentially CMF live, as always. And I go by the persona of Crypto Miles, if you're wondering who I am. And on this live, I talk about the most recent news that's happening around the world every single night. I talk about the most recent news in cryptocurrencies, CBDCs, AI, politics, regulations, financial, AI, politics, regulations, vital information for you to know about cryptocurrencies, vital information for you to know about regarding the world completely transforming into a digital era. And the disclaimer of this live show has always been not financial advice, not political advice, and what advice is only for entertainment purposes. But if you're wondering what this live show was, that's what this live is. And this was episode 192 of the CMF live. Episode 192. You can tune this live every single night, starting essentially 11:25 p.m. UK time onwards. So CMF live, tune this live every single. By the way, thank you so much to everyone who's also, if you haven't subscribed, subscribe. If you're watching this on YouTube and you're watching this for the first time ever, subscribe if you already haven't. If you're watching this on X for the first time ever and you're not following me, follow me. Tune in every single night. Get involved inside the comment section as well. And we also have our own communities page on X as well. If you're watching this on X, join the CMF Live communities page. Amazing place to be in. And join the CMF on Telegram as well. If you already haven't, it's also free as well. This live is free. The Telegram group is free. The X communities page is free. Everything is free. Forever. And you can also message me and so on. You can also message me, call me on Telegram, message me on Telegram. Just before you call me on Telegram, send me a message. But I don't charge any money whatsoever. I've been doing this for over 2 years inside the crypto space. I don't charge a single penny. I'm more than happy to help out anyone as much as I can, completely for free. And I never ask for anything in return. So if you're not subscribed, subscribe on YouTube if you watch this for the first time ever. If you're not following me on X, follow me on X if you watch this for the first time ever as well. And this was the CMF Live. We talked about on tonight's live regarding a report that came out from Ripple on what their movements are so far inside the banking sector. Then we talked about essentially Hong Kong Stock Exchange, a new thing that's coming out of EU connecting to the Hong Kong Stock Exchange. And then we went through the news topic on tonight's live regarding the matters of JP Morgan CEO being an absolute crybaby. And then we also talked about Wellington and Ondo Finance partnering together. We talked about the Japanese market space being on shaky grounds, hence why there's a lot of movements happening inside the crypto space as well. Then we also talked about UBS's essentially report, the UBS Bank report that came out on what the political movements are going to be moving forward, what's the world going to be transforming into in terms of the economy moving forward. And then we also talked about Coinbase's essentially Q3 reports that came out, and Wall Street was not very happy with the reports, but they're still good. We also talked about Microsoft's voting system that's going on towards cryptocurrencies. I get a little bit more description this time. We also talked about the Florida CFO proposing that Bitcoin could be used for pension funds. And we also talked about on tonight's live regarding the US Treasury essentially report that came out as well. We also went through the news topic regarding MicroStrategy's $42 billion acquisition towards Bitcoin. Their 2121 plan is what they're calling it. We also talked about on tonight's live regarding the investments of a giant company, Bitwise chief officer. So those are the news topics we went through on tonight's live. Drop a follow, drop a like if you already haven't. If you're watching us on YouTube, subscribe if you already haven't. Drop a like, drop a comment outside the live. If you're watching us on X, drop a comment outside the live, retweet, like, follow if you haven't. Join the X communities page as well. And this was the CMF Live, episode 192. That's all BS. That's all BS I've ever wondered. They've even been settled for having dirty hands yet. Let's go, Miles. Let's go, Scott. CMF family members, please share the live. Let's go, Scott. 100%. Let's go, Shelly. Trump 2024. Let's go. Good night, Miles, and thank you for the news and a great live as always. JP, let's go. See you, brother, same time as usual tomorrow. Mike, thank you, Miles and CMF. Good night. See you tomorrow. Mike, see you tomorrow, brother, same time as usual. Orphan, thanks, Miles, for your time. Have a good night and see you tomorrow. Orphan, see you tomorrow, sometimes as usual as well. Brother, could you give me a call? I want your opinion on something personal, and as always, great live. No problem, come after the live. I'll speak to you. Thank you, Miles, for everything you do for us. We appreciate you. Night, everyone. Joe, let's go. See you tomorrow, sometimes usual. Good night, Miles and Crypto family. Thanks again. Peace, brother. William, let's go. See you tomorrow, sometimes usual. Thanks, Legend, for keeping us informed night and day to all CMF. Shelly, let's go. See you tomorrow, sometimes usual as well. Great live, Miles, as usual. Good night, Miles and CMF. Jason, see you tomorrow, but sometimes usual as well. Great job, Miles, as always. Share the live. Let's go, Scott. Scott, see you tomorrow, but at the same time as usual. I will be seeing everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. We'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. You're the best. Let's go, come on, brother. Take care, Miles and CMF. Great live as always. Great. Let's go. See you tomorrow, but same time as usual. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See you tomorrow, same time as usual. If you haven't followed,